Hello all. Where are we heading? This has been a question which is keeping in mind all the investors across the globe. Last 3 months, we have seen an unprecedented movement of the stock market. From January, February 42,000 level, we have gone down to 26,000 level in March when government declared complete lockdown due to coronavirus. And now we are at around 32,000 level, which is 20% up from where we are in March. Now the questions comes to obviously mind that where that is the market will go down from here or it will go up from here. Before answering that, I'm going to ask you a question. What do you see, where do you see the market is going to be in next 5 years time? I have raised a question to a couple of my clients, and what they have said to me is most of them have said that in a 5 years market will be up from here. Couple of them have said in 2 years, 3 years market will be up from there. Now no one can predict exactly where the market will be, but with some data and prediction one can gauge where the market will move from here. Now if we take 5 years time also, the annualized return will be 8.4%, which is much higher than the worst fixed income will usually give you. To better understand where the market will be heading, let's go back to the past. If we see the US stock market in the last 100 years, we have seen various movement in the market. Market has gone down 54% in 2007-8 during the subprime crisis. In 2001 also market has gone down 30%, and likewise there are many instances where market has moved up and down. But over a period of time, you have always seen that market has shown an upside movement. Back to Indian market, if you see the stock market, Sensex in the last 20 years have seen various upside and downside, but in an overall longer period of time, you will always see the curve moving upward. Understand, stock market doesn't work on a flat upside movements, but it always has a curve, a heart rate curve, but eventually in a longer term market moves up. A lot of investors ask me that they have invested 3 years, 4 years back, and right now the value is low. If you see the mutual fund as well as the individual stocks also, if you see the individual stocks of SBI, ITC, Tata Motors and few others, bearing few, you will see most of the stocks are gone down to their 5 years level also. What exactly happened during this time? That corona impact is something which has happened we have not seen in the last 100 years. Last we have seen a 1920 Spanish flu. Like if someone says that if they have invested 5 years back in a bank savings rate also, they have got a better rate right now rather than investing in stocks and mutual fund. But understand, in next 2 to 3 years time, when the market will go high, why the market will go high, I will tell you later on. All the notional losses that you might be seeing in your portfolio will be wiped out. This time in corona, we have seen some very unusual pattern. If you see the Nasdaq and Dow Jones index, which is currently trading at 5 to 6% below its all-time high, it has gone down to rock bottom and then has moved up, as well as Indian stock market, which has gone to 26,000 and moved up to 32,000 level. Now the question arises, why the stock market is rising, when there is so much of unemployment happening, when obviously the economy is going down, the GDP rate is going down, why it is happening? There are a couple of points that need to be taken care of. Number one point, if you see the bond yield rates across the globe, it is coming down. In US, the Fed has given a huge amount of money to you. They actually printed huge amount of money and given all the Americans in the last 1 or 2 months, and they have pumped in a huge amount of liquidity in the systems, which resulted in the bond yields rate going down. US bond yield is currently at 0.65 and 6%, 0.6% level. And if you see the other developed economy also, it is near about 0% level. So what happens if your bond yield is at 0% level? If you invest in a fixed instrument, it is a guaranteed loss, keeping in mind the inflation into account. But if you are investing in a stock, you will have a probability in a shorter run to go up and down. But in the longer run, it will always be a beneficial, as I showed you earlier. Second point, we have the crude oil prices coming down. Another interesting thing I want to tell, this huge amount of money supply has resulted in asset inflation and PE expansion. When quantum of money increases, its value decreases, and that's why stock increases. So these are a couple of factors why you have seen the market has gone up from rock bottom level in 2 weeks time. Eventually what happened in the COVID, that once the market COVID thing happened, stock market actually hammered down 40% in anticipation that the next 6 months market activity will not be there. So all the assumptions that market will go down from here further doesn't hold true, because market has already factored in the losses which have been incurred. But there is one thing which can happen, that in the next quarterly results, which will happen in July and in October, if the result do not come as per the market expectations, it can have a little slight hitch over the downside also. But in a short term fluctuation, I don't see the market going down much below from here. Another interesting data point is that Indian economy export to GDP ratio is only 12%. So our GDP is less dependent on our export, like unlike other world major economies. Okay, so if there is less demand internationally, we will not be impacted that much. We have a huge market internally, and the last 7 8 days, government, the kind of measures the government are taking, kind of Make in India campaign that has making, you will see a lot of activities that will going to happen. Consumptions and public demand will rise because of the activity which has government had taken step, but it will slowly take some time, 5 months, 6 months down the line, and the results will be inevitable in going ahead. Now, investor sentiment moves across the concept of loss. Now, when we suffer loss, when we actually take out the money that we have invested in. Now, if we do not take out the money, it is called a notional loss. Now, what exactly happening right now is that most of the investors are having a loss of conviction. Like, they don't believe that market will rise. They believe that no one will going to buy right now, which is quite common, because a lot of informations, lot of media reports are there as per how the market is going to behave and all these things. But here I want to point out one interesting thing. During the month of December and January, when the coronavirus actually spread in China, Indian market was rising. Okay, they do not anticipate that it will happen that much of phenomena. Even in the month of Jan end and Feb beginning, the market was rising and no one anticipated that. But soon it comes to India, in the month of March, market crashes down in Indian market. So what exactly happened is that we normally do not anticipate what is going to happen in the future. We actually played what is happening right now. If you see the world things which are happening, if you see Wuhan, for example, Wuhan is actually the lockdown has ended. People, children are going to the school, college, and etc. In India also, you will see in Kerala a lot of development has happened. It has already been carved out, and coronavirus has been contained in that particular area. So a lot of positive news are coming up. You will see that so the vaccine things are also in progress. Probably 6 months, 8 months, or 1 year time, it will come up. And like the coronavirus came, the one day you will find the news that the vaccine is out and the coronavirus is gone, and that's time the market sentiment will move up and people will start investing from there. From that point of view, if you see in a short range, yes, we will have a problem. We will have a lot of fluctuations. But if you see a longer, precise point of view, I see that the market is not going much below from here. And probably in 2 to 3 years' time, we are going to rise to a new level. What I mean to say that what happening today is not important. What will happen in the future is one need to anticipate and predict, and that's why the investors investment decision to come into place. Secondly, I want to share with you interesting data point from IMF, which says that in 2021, Indian GDP growth will be the highest, one of the highest in the world. Okay, so 2020 it will be lowest. So if we go by the data point, that will be the huge beneficial for India, and also because what we have seen in the market of China, you will see a lot of companies will come to India, and as a such, the FIs will come into India and hugely, and they will impact it Indian market that way. Probably it will not happen in next 2 months or 6 months. It will have 2 3 years time duration, but you will see the most world bigger economy. They will not depend all their infrastructure, all their sourcing pattern from China, and they will separate out in different countries. And India will be beneficial for that. So those are some of the positive that one need to take into consideration. I always say that do strategic investment with asset allocation in mind and not tactical investment. One of the reason why people invest in equity that they're looking for a higher return. So if you have 100 rupees in your bucket, do not put everything in an equity. Do a proper asset allocation in mind. So if you are investing in equity, give at least 5 to 10 years kind of duration to let the asset perform, because corona is some instances, no one can know what is going to happen in future. You can have some other virus coming up, some other global event coming up, market will again be hammered. We have seen the last 100 years of US stock market. I have shown you the result. It can happen anytime. So if you are investing in equity, it has to have 5 years or 10 years time frame to get the desired result. The return will not be linear. Like if you get 3% return in savings account or 7% in FD, equity market will not give 7% every year. It can go to minus 20% 1 year to plus 50% 1 year, and that's why the average comes up to 12 to 15% level over the period of time. So do a strategic investment. If you have 100 rupees in your bucket, place some amount where you can have a liquidity issues, and if you are investing in equity, look for a longer term duration for that. Currently, if you are looking for a sector investment, I will say the healthcare and infrastructure, which will be the huge sector where government huge spending will be there. Obviously, infrastructure, because government will lure a lot of foreign investors to come and invest in India, and that's why the infrastructure, healthcare is obvious. A couple of sectors which will be impacted in short term, like aviation, travel, tourism, and hospitality. So at the last, I can only say that that most of the people think that I will come back when the economy recovers. Okay, understand market anticipates, doesn't respond. It rises sharply before we convincingly know that it is back on track, right? So whatever loss that you're facing right now, whatever notional loss that you're facing right now, don't make it a permanent loss. As I shown earlier, that in next 2 to 3 years market will rebound back to this next level, and whatever notion loss that you have, it will be totally wiped out. And if you see that, if you vis-a-vis compare yourself with FD and other instrument in 2 to 3 years time, obviously it shows negative. But if you see in a longer time frame, for 5 years, 6 year down the line, you will have a extremely positive experience from here. So if you have any query, if you have any questions, you can write back to me. I have given the link below. Please do subscribe to my channel. I will be coming up with new content every weekends. Thanks for watching.